Hello and welcome to Coffee and Conversation. I'm your host Karim Raffa and I'm joined today with Hal Bosher, the former CEO of YOMA Bank and the current chairman of Wave Money. Hal, welcome on air.
Thanks for having me, Karim.
It's great to have you, and I'm sure you have a lot of insight about the financial sector in Myanmar, which is quite a developing space. Can you tell us a bit more about the changing landscape and what's happened during your time there?
Well, it's moved a lot. I arrived in Yangon in late 2012, and YOMA Bank at the time did not have a core banking system. So it gives you a sense that from 2012, and that was the case, in fact, of many banks. In fact, perhaps all of the local banks at the time did not have any sort of basic tech stack. And in the intervening 7 years, almost all the banks have put in core banking systems. They've adopted mobile technology, and the space is moving fast.
That's really interesting. I mean, how does a bank operate without a core banking system? Can you put that in perspective for our viewers?
It's a very good question. I don't think it's things that people have seen for a long time. In fact, I think it was one of the major challenges for many, shall we say, experienced bankers that have come in from overseas. My background was not in banking, and so I didn't really know what to expect, and I just sort of went with the flow. Every branch had ledgers. And so branches were not, there was no core, so branches were very much satellites. And if you banked with a bank, you banked with your branch. You did not bank with the bank as a whole, and you had to go to your own branch. And if you wanted to send money to another branch within the same bank, you had to make a remittance. So it was very much a sort of a 1940s, 1950s type of architecture, all very manual, all very operational. And consequently, there wasn't very much financial inclusion.
So I know that you've been with YOMA for about 6-7 years. How long has it taken then for YOMA to make that transition to a more digitally native bank in I guess your tenure as SEP?
To be frank, it's ongoing, and I think that's the case for most banks around the world. It's a process, but the leap, many banks, Western banks, even developing market banks, the leap is much less. You can imagine going from a ledger to APIs in 7 years. And so there's been a huge leap that the bank has to make. And in truth, not only the bank, but the customers. You can imagine you're accelerating what most of us in the West have experienced over maybe 30, 40 years to 5 years. And that, I think, is a challenge not only for the bank itself, but also to the customer base.
How is the customer base receiving this new tech? Is it a hurdle that they have to adopt new technology, or is it also a very digitally native culture?
Look, the genesis of a lot of the transformation of the country was the entry of new telcos in Myanmar. When I arrived, there was only the legacy telco provider. SIM cards were very expensive, and very few people had that type of technology. Effectively, there was very little communication at all. And in the intervening years, two international telcos, Ooredoo and Telenor, came into the marketplace and provided 3G and now 4G technology. So this is the enabler. Equally, the proximity to China with cheap smartphones. I mean, unlike Africa, where they're feature phones, and that has been revolutionary in itself, but the proximity to China allows one to get a decent smartphone for $20. And so that has provided the interface. And so to answer your question, depending on the generation, you can imagine not everyone's as sort of familiar with technology as perhaps some of the younger people. But on the whole, I think adoption has been quite fast.
I can imagine, when you give a smartphone to everyone at a cheap price and it becomes a new norm, it's not just an opening for banks, but also e-commerce and delivery systems, and all of these things suddenly become possible through this little data-capable device, right?
You need that architecture. So you can have e-commerce, but as you say, if you don't have the delivery services, and a delivery services needs infrastructure. So many parts of Myanmar are still building roads rather than looking for their Amazon delivery. So it is not a linear progression where we in the West had a lot of legacy infrastructure that we could then sort of leverage to deliver, e-commerce and other more, 21st century solutions. Myanmar is still building up power, roads, that type of thing. So it will come, and there is some available in Yangon and perhaps Mandalay, but in many parts of the country, a lot of what you see online is just that. You can only see it. You can't really, use it.
In the West, like you said, there were legacy players and there's legacy infrastructure to work on. Other developing countries per se, when digitalization is taking up or catching up faster, this also opens the borders for foreign companies and foreign investors to bring their tech and infrastructure with them. As a bank and a legacy service provider, how does that position you?
In many ways, it's a huge advantage having no legacy. I think many people listening today will be experiencing firsthand the problems of marrying a sort of legacy tech with more modern tech, and that's a problem. And we didn't have that in Myanmar. On the other hand, shall we say, there was expertise, but it's difficult to identify the right solution for you at the right time. I mean, if you move too far forward, you're acquiring technology that you can't use. You don't have the skill to code in it, and you don't have the skills to deploy it. On the other hand, if you're not forward enough, then you're missing the advantages. So I think for many foreign players coming into the marketplace, it was about calibrating their solutions to the needs, not only of the bank, but as I mentioned earlier, of the people. You know, there's no point in giving somebody a Ferrari if they've never driven a car, right? They're simply not going to know what to do with it, right? So I think this is part of I've always said in my time in Myanmar, it's about pace. You have to find the right pace.
Because when you do mention inter-branch transactions being a bit like remittances, the first things that come to mind to me as, say, Western Union, for example, be, wow, that is the ideal marketplace to arrive and provide a service. What is the hurdle for a company like that to arrive?
Well, as you know, Western Union is international. And remember, there's a regulatory overhang. So it's not as if the Central Bank of Myanmar simply allows all players to come in and deploy. For better or for worse, there are barriers to entry. There's certainly an affinity for the local players, and it was a huge advantage. I mean, certainly for me as a Canadian, it was very interesting to be within very much a Burmese bank, Burmese ownership, 99% Burmese staff, they don't speak English. It was a challenge for me to operate, certainly in the early years, but it was also a huge advantage. We had all the necessary licenses to work. Whereas, new players need to go through that process, which can be lengthy, with the regulator. So Western Union would have that challenge. Equally, you need to build a distribution, right? You need to have a start and an end, and that takes time. That's something that we looked at, with Wave, and that's effectively what Wave is. In many respects, it's a domestic Western Union.
Hal, I'm afraid that's all the time we have today. Thank you so much for coming on the air and sharing your insights.
Thank you, Karim. It was a pleasure.
Thank you all for watching. This is Coffee and Conversation, and we'll see you soon.